This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices slid on Wednesday, giving up some of last session's gains, as an increase in U.S. crude stockpiles and easing worries over Libyan supplies weighed on prices, although the decline was limited by potential U.S. tariffs on Canadian and Mexican imports. Brent crude futures fell 18 cents, or 0.2%, to $77.31 a barrel by 0548 GMT, while U.S. crude futures declined 15 cents, or 0.2%, at $73.62 a barrel. While markets are tackling demand-side pressures, easing backdrop on supply side is equally weighing over oil prices, said Priyanka Sakdeva, senior market analyst at Philip Nova in Singapore.
Saudi Arabia's energy minister and several of his OPEC plus counterparts have held talks following US President Donald Trump's call for lower oil prices and ahead of a meeting next week of OPEC plus oil-producing countries, according to official statements and sources. Trump last week called on Saudi Arabia and OPEC to lower oil prices. OPEC plus has yet to respond, but 5 OPEC plus delegates said a meeting of the group's top ministers on February 3 is unlikely to adjust its current plan to start raising output from April. On Monday, Saudi Energy Minister Prince Abdulaziz bin Salman held talks with Iraq's Hayyan Abdul Ghani and Libya's Khalifa Abdul Sadek in Riyadh, the Saudi press agency reported.
Moving on to the top news in the energy sector.
Top U.S. oilfield services firms are facing weaker pricing and revenue this year as oil producers become increasingly efficient and keep a cap on spending, according to oilfield executives and analysts. U.S. producers, mainly shale companies which led a fracking revolution that unlocked vast new supplies of crude from rock, are pumping record amounts of oil, but using fewer rigs to do it after the COVID-19 pandemic crushed prices and spurred a boom in company mergers and new efficiencies. The number of oil rigs has dropped to its lowest since December 2021, according to oil service provider Baker Hughes. In the Permian Basin, the top U.S. oil field located in West Texas and eastern New Mexico, the rig count is at its lowest since February 2022.
China appears to be building a large laser-ignited fusion research center in the southwestern city of Mianyang, experts at two analytical organizations say, a development that could aid nuclear weapons design and work exploring power generation. Satellite photos show 4 outlying arms that will house laser bays, and a central experiment bay that will hold a target chamber containing hydrogen isotopes the powerful lasers will fuse together, producing energy, said Decker Eveleth, a researcher at U.S.-based independent research organization CNA Corp. It is a similar layout to the $3.5 billion U.S. National Ignition Facility in Northern California, which in 2022 generated more energy from a fusion reaction than the lasers pumped into the target, scientific break-even. Next, we have the top news in metal market. India's Mines Ministry has earmarked nearly $2 billion to develop its critical minerals sector as the world's fastest-growing major economy aims to secure raw materials such as lithium, according to a source and documents from the ministry. In 2023, India identified 30 minerals, including lithium, as critical for its energy transition efforts and to meet the growing demand from industries in the infrastructure sector. The country otherwise relies on imports to meet its rising demand. Out of the proposed funding of 163 billion rupees, $1.9 billion, to develop the critical minerals sector, Prime Minister Narendra Modi's cabinet is likely to initially approve more than $300 million this week, said the source, who is directly aware of the matter and asked to remain unidentified as the deliberations were not public.
Steel demand in Russia will fall by at least 5% in 2025 amid high interest rates, Russian Steel, the country's steelmakers association, said in a statement on Tuesday. In 2024, the association estimated that domestic steel demand had collapsed by 5.6%. It blamed the fall on a slowdown in construction and engineering activity and delayed deadlines for energy sector infrastructure projects. It said in the same statement that steel exports in 2024 had fallen by 7.9% and production by 6.4%.
We will now look at the top news in the agricultural sector.
European Union soft wheat exports since the start of the 2024-25 season in July reached 12.18 million metric tons by January 26, up compared to 11.74 million the previous week, but down 37% from a year earlier, European Commission data showed on Tuesday. However, the Commission said export data for Italy has been incomplete for the past 7 weeks. For France, data has been incomplete since the beginning of 2024, while export data for Bulgaria and Ireland has been incomplete since the beginning of the 2023-24 marketing year. A breakdown of this season's volumes showed Romania was still the largest EU soft wheat exporter, with 3.38 million tons so far, followed by Lithuania with 1.78 million tons, Latvia with 1.57 million tons, Germany with 1.38 million tons and France with 1.35 million tons.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.